financial system continues to struggle. The beginning of March was one of the darkest days for all of America's banks, two of which, Silicon Valley Bank and Signature Banks, have collapsed. This was the most significant financial crisis since 2008. Even though they seemed wealthy and prosperous, it took only 48 hours to bankrupt them, as they could not withstand bank runs that occurred. Although the government and financial sector officials ensure that the turmoil is over, it turns out other banks also have severe problems. For instance, American banks and one of the most prominent banks in Switzerland, Credit Suisse, are in the worst shape. Thus, in this video, we will discuss the problems of the banks mentioned above face. But before diving into the subject, consider subscribing to the channel. That way, you help the production of future analytical videos on the most important economic topics. For broader context, let's look at the grand picture. First, the demise of SVB and Signature is a systemic problem, and other banks are vulnerable. In this regard, the domino effect of mass bank bankruptcies encase depositors' demand their money is real. Second, experts have calculated how many banks are at risk. A study published on Social Science Research Network says we compute similar incentives for the sample of all U.S. banks. Even if only half of the uninsured depositors decide to withdraw, almost 190 banks are at a potential risk of impairment to insured depositors, with potentially $300 billion of insured deposits at risk. Third, bond losses are not the primary cause of the bank collapse. For instance, in the case of the Silicon Valley Bank, it lost $1.8 billion in bonds, but what broke the bank was the depositors rushing to get their money back. The economists at Politico explain that it had less to do with the losses than it did with the depositors' reaction to those losses. $42 billion gone in a day, which likely would have been more if SIA regulators and FDIC did not step in. Hard to survive that kind of run. Now, back to the condition of the banks in America. For instance, Wells Fargo Bank. As of the 31st of December 2022, the 15 largest banks in the United States hold a combined total of $13.4 trillion in assets. Headquartered in San Francisco, Wells Fargo is the fourth largest bank in the country, with over $1.7 trillion in assets. Thus, its collapse would be a devastating hit for the banking sector. During the days when SVB and Signature banks were failing, Wells Fargo had some issues. The customers have noticed glitches on their accounts while trying to make transactions. If you see incorrect balances or missing transactions, this may be due to a technical issue, and we apologize. Wells Fargo posted on Twitter Friday in response to a user who wrote, "Give me my money back." However, the bank representative said, "Your accounts continue to be secure, and we're working quickly on a resolution." So, blaming the technical issues avoided the mass panic problem. That being said, the bank has been undergoing legal issues that could bring it to collapse. In December of the previous year, Wells Fargo agreed to pay $3.7 billion. According to the Consumer Financial Protection Bureau, CFPB, on Tuesday, ordered Wells to repay $2 billion to consumers and enacted a $1.7 billion penalty against the bank. As it turned out, the bank was charging its customers illegal fees and interest on auto loans and mortgages, as well as incorrectly applied overdraft fees against savings and checking accounts. On top of that, some bank employees created millions of deposit and credit accounts without the customer's consent. And recently, according to Associated Press, a former Wells Fargo bank executive accused of overseeing a ruse that created millions of bogus customer accounts has agreed to plead guilty to criminal charges, likely to send her prison for her role in the scandal. Besides falsifying bank accounts, Wells Fargo executive to be held criminally culpable for a scandal that resulted in the firing of 5,300 employees. Apart from the scandal, the collapse of SVB and Signature has affected big banks like Wells Fargo. although it seems that the largest banks in America have not been hit that hard, as the shares of Citigroup and Wells Fargo each fell more than 7%, while the KBW Bank Index, which tracks the performance of 24 major banks, fell 10%. For the full fiscal 2022, Wells Fargo recorded $72.3 billion in revenue and $12.1 billion in net income, down 13% monthly and 40% yearly. And as already mentioned, reputation, in many cases, plays a significant role when it comes to the stability of a particular bank. Thus, no wonder why banks in America are at risk of a huge run that might destroy the economy. As the financial sector of the modern world is becoming more accessible, such fluctuations in the banking system cannot be ignored. Therefore, despite the fact that Switzerland is quite far from the U.S., the condition of its financial institutions plays a huge role globally. As you might have heard, Switzerland's one of the most well-known banks, Credit Suisse, has collapsed. As already said, the trust of depositors is the key to the survival of any bank, regardless of its size. In fact, it was the second largest bank in Switzerland. Founded in 1856, it has always had a name for being a marker of stability within the banking sector and one of the top 30 most important banks in the world. But the bank lost a lot of its profit in 2021, the worst year since 2008 crisis, and recently money laundering charges emerged. Credit Suisse's collapse reveals some ugly truths about Switzerland for investors, is the article's headline in Bloomberg. Just a few weeks ago, shares in Credit Suisse fell 8%, despite Swiss National Bank's emergency loan of £45 billion, which is over $55 billion. According to Reuters, the bank saw an acceleration in withdrawals in the fourth quarter of 2022, with outflows of more than 110 billion Swiss francs, but said the picture had been improving. So, depositors rushed to get their money and withdrew almost $120 billion in few months, which is a catastrophe for a bank. Financial Times reported that shares in the 167-year-old bank fell 25% over the week. Money poured from investment funds it manages, and at one point, account holders were withdrawing deposits of more than $10 billion per day. The money laundering scandal resulted in Credit Suisse and its employee being found guilty by Switzerland's Federal Criminal Court. These deficiencies enabled the withdrawal of the criminal organization's assets, which was the basis for the conviction of the bank's former employee for qualified money laundering, the court said. In the end, Credit Suisse was acquired by another Swiss giant bank, UBS, for $3.2 billion, and even a $55 billion lifeline could not prevent it from collapsing. Now, in the case of Wells Fargo, it seems that the bank has survived. Some experts say that it is too big to fail. In fact, Bank of America, Wells Fargo, and Citigroup have all experienced a significant increase in deposits since Silicon Valley Bank ran into trouble last week. People familiar with the matter tell CNN. Furthermore, the banking sector in America has consolidated and come to the rescue of other regional banks. 11 largest American banks, including JP Morgan, Bank of America, Citigroup, and Wells Fargo, bailed out First Republic Bank by delivering a $30 billion deposit. This action by America's largest banks reflects their confidence in First Republic and in banks of all sizes, and it demonstrates their overall commitment to helping banks serve their customers and communities, the banks said in a statement. The move was condoned by the government, as Treasury Secretary Janet Yellen, Acting Comptroller of the Currency Michael Hsu, Federal Reserve Chair Jerome Powell, and FDIC Chairman Martin Grunberg said in a joint statement. It can be said that the First Republic dodged a bullet. At the beginning of March, the bank desperately tried to stay afloat. At some point, the New York Stock Exchange automatically halted trading 11 times to prevent a free fall after shares of First Republic fell too much. At the end of the day, it is evident that the financial system in America and beyond is in its worst shape since the financial crisis in 2008. So far, 2 U.S. banks and 1 Swiss bank have collapsed, but it is unclear how long the banking sector can survive if another crisis hits. Thank you for watching. If you enjoyed the video, hit the like button and subscribe to the channel.